So let's take some questions. I like questions. What do you guys got?
Hey everybody, it's Dave. I'm back with another Maker Zone. I wanted to look at startups in more detail today, and at Kickstart Accelerator in Zurich this summer, I met Matt. Maybe he wants to introduce himself a little bit.
Yeah, hey, I'm Matt Schaffnit from a company called Lenditapp. We're a fintech company that's solving pain points in small business lending.
And I thought that it would be a good idea if we show you the inside process of building a startup, the difference between talking about a startup and doing your PowerPoint and actually launching one and having the guts to do it. And the stamina and the patience is a big deal. And I want anyone who's involved in the startup community or who really wants to be these days to take a close look at what Matt and the team have done. So I kind of wanted to tell the story, kind of document the process by which you created Lenditapp.
Sure.
So first maybe we could talk a little bit about, what is it, what's the business, and how is it kind of created?
Yeah, sure. So where we are today and what we are is a white labeled solution that digitizes the loan application process in small business lending market. And we're also developing other technology that will ultimately use machine learning to help reduce the risk in lending to these credits. And so we want to...
What does white label mean? So people don't know that generally.
Oh yeah, great. So white labeling is by where you provide a technology solution to another institution and they put their label on it. So the end user doesn't really know that you're behind the technology.
So you take Lenditapp and you basically place it into someone else's banking secret walled environment,
Yep.
and then they market the service that you provide as their own. So they put a logo on it and say this is part of our service, but actually you're in the background running it.
Exactly. And so we're a software as a service solution. We have offered an enterprise license in a rare instance. Mm-hmm. That just means that it's an on-site installation. And those are a little tougher to scale, so that's not the direction that we're going.
But what struck me about you guys is, first of all, you're not 22-year-olds running around with MacBooks. You seem to be a little bit more the mature audience of startups. And this is a lot of the difference that it takes to create a very successful startup, I think. Can you talk about yourself as a founder, co-founder in the team, and your fellow team members?
Yeah,
how did
sure.
you get the business started?
Yeah, great. That's a great question. So for me personally, right out of high school, I grew up in a small town in western Pennsylvania called Erie. I wanted to be an entrepreneur. And I didn't go to college right away. I tried my hat at very different things. And what my 35-year-old self looks back at is that I was lacking one critical component, and that was vision. Because at the end of the day, you have to want to build the best whatever it is widget. And then you can run at that. Because, as cliche as it sounds, you can't hit a target that you don't have. Mm-hmm. And so I went back to school. I got a degree in business and finance. I worked on Wall Street. I worked for about 7 years before stumbling upon my now business partner at a holiday party.
And why does it always seem to happen like that? So two people look back and they say, we stumbled upon each other. Like, how did it actually happen, and how did the idea come down onto paper after that party?
Yeah, great. So before that, Lenditapp actually already existed in concept, and there was some technology development already made with the version 1 of our platform. And when I met Marcus, the product was kind of having not as much traction as he would have liked, and we started to kind of spitball as that relationship developed about, well, what would it look like? And initially, the way it was conceived was the original founders, Marcus, Martin, and Alan, were sitting on the rooftop of a beer garden. And Alan had stumbled upon this alternative lending space in the US and was like, this is all paper-based. Mm-hmm. These guys are calling people. They're kind of like going like this. It's a completely inefficient process. And why? We could do this way better. And Marcus is a serial entrepreneur in technology. Alan is an old equity stock trader. And Martin is our CTO in technology.
But you became the fourth guy in the garage, so to speak. So this wasn't two guys in a garage. This was a team of 3 people. You joined and something changed.
Yeah, absolutely. So when I met Marcus in December of 2014, like I said, the project was going this, and we started to look at it. And it was originally conceived as being kind of just a tool for them to use in-house and basically provide credit to small businesses. And when I came, since it wasn't getting a lot of traction, I said, this is an enormous market. In the US, it's a $1.2 trillion balance sheet business. There's $250 billion of turnover every year between new originations and refinancing.
Just in one country.
Just in one country.
Wow.
And so take that to Europe, take that to the emerging markets, which is there's a lot of dry powder there or room to runway.
But this isn't private individuals getting lending from a bank. This is small businesses. So merchants, so grocery stores, retail markets.
These are your
whatever.
barber shops. These are your neighborhood bodegas. These are the lifeblood of the economy, right? The small business supplies something like 2/3 of jobs across developed nations. They represent over 90% of business activity. And they're suffering because they're not able to access credit in an efficient way. And as a result, in the US specifically, they're paying enormous rates. You know, a cottage industry has kind of burgeoned in the US. It's about $16 billion today. In 2010, it was less than $1 billion. And these,
Why? How can it have that much growth?
I think it's a primary result of the banks shutting down liquidity to small businesses.
Right, the crisis caused this.
A little bit, yeah.
Okay.
And so, you know, if I'm a bank and it's really expensive to service an SME loan and originate it, then...
Can you define SME for people?
Oh, yeah, sure. Small and medium-sized enterprises.
Okay.
So apologies. If it's very costly to issue it, if it costs me the same amount to issue a credit that's $1 million versus one that's $100,000, then I'm gonna just go for the $100,000 or the $1 million, right? And so as a result, small businesses don't access capital.
But you guys, I don't want to go too deep into the business model because we've reviewed it before in detail. You know, I like it a lot.
Yeah.
What I really have respect for and what I want to show people today is how did you convert basically a back office unknown application, right, into something that actually has good traction? Like, what's your current traction? Can you define that for people so they understand the size of the business you guys have created?
Yeah, no, absolutely. So in the U.S. market, we've processed nearly 19,000 loan applications, representing a dollar volume of about $825 million. And
So almost $1 billion of
about
loans.
of application volume, not new originations. And we got traction there. My business partner, Martin, lives in Bern, and he started going to a couple banks, and we ended up winning a banking client. We said, hey, you should be offering unsecured credit to small businesses. They desperately in need of working capital. It's good. It's a win-win for everybody. And they said, yeah, we really want to do that, and we want to do it in a very business-friendly way. And that's when we started developing the next iteration of the platform.
So this is then user experience. So you said in a better way, which
Absolutely.
means make the platform self-standing so that people like to use it.
Yeah, absolutely. We're a customer acquisition management tool that digitizes the loan application process. We're building underneath that a risk tool that works with the bank or non-bank's lending criteria, underwriting criteria, and uses machine learning to, you know, not only better automate the process, but also assess the credits better.
Okay, so you guys kind of heard already, you know, the story of the first big moment was the team growing,
Yep.
growing out the application, seeing a pivot in strategy.
Yeah.
What was kind of the next big moment that you can remember that, where the kind of pace changed at the company when you look back and connect the dots?
Yeah, you know, we work in some marketing efforts with some of our strategic partners, and that was in the summer of 2015, and we just started getting a lot of traction. A lot of the loan applications that we processed really took off in end of Q2, Q3, Q4 of 2015, and then we won the banking client in Switzerland. And when we won that was like, okay, now like we got something solid.
So then you're international, not just a U.S. middle office where, but then a real end product in Switzerland as well.
Yeah, and so look, the original vision was just tackle the U.S. market. We got some traction here. Said, hey, this is great, and hey, the CTO lives in Switzerland. It makes sense to be operating there, and it won't defocus us too much.
Okay, technical term, CTO is Chief Technology Officer. It means the guy doing the technology behind. That's Marcus living in Bern, Switzerland, right?
Yeah, Martin. Yeah,
Martin.
Yeah, absolutely. Yeah, no
My
worries.
M's mixed up.
Yeah, absolutely. No, it's the 3 M's, Marcus, Martin, and Matt.
Yeah, it's terrible.
And Alan. Yeah.
Somebody needs to change the name, basically. But I want people to see the process because a lot of, you know, we were just in London. If you look at the London episodes, basically you see that it takes a long time to build a company successfully. This has been going 2 or 3 years.
Yeah, 3 years now since inception, since Marcus, Martin, and Alan had their rooftop discussion in October of 13 to today.
I think a lot of people out there, you might have the misconception that it's a playing roulette game. You develop some app, so everyone just does Flappy Birds, put it in the App Store, and it gets downloaded 1 billion times, and you become the next guy with a Gulfstream, right?
Yeah.
Flying around the world.
Yeah.
This isn't how startups happen as far as I've experienced it.
Yeah.
They're through hard work, pivoting, learning, and a really good team behind it.
Yeah.
So you talked about, like, the first model was the US, second model started to pivot towards Switzerland, institutional customers. Is there another moment that you can remember where the business really shifted up a gear? I remember you were in Kickstart Accelerator, but I don't know.
Yeah, absolutely.
Why?
So we're currently raising money. From a financing perspective, we completely self-funded the project until we proved that we had a business case. And once we had some traction, we raised some angel money. And
When was that?
in the Q4 of 2015.
So 2 years after it started,
Yeah,
more or less.
about
So
a
it had been
year,
done
about
on
a
just
year,
side
October of
money
13,
and
yeah.
time of people. So it was a hobby. And then after 2 years of building up traction and momentum, you did Angel.
Yep.
Which means you raised money from family and friends.
Family and friends, the 3 Fs, as some
three
people
Fs.
like to call it.
Right.
And at that point, we said, okay, we're going to use this capital to kind of just fortify our operations until we can raise a small amount of seed money, or maybe minor A, you could call it. And we're currently raising $2 million, and we're going to close that by the end of January.
Wow, that's a
Yeah.
big, and that's only a year after your angel investment.
Yeah.
So that's actually fast traction. And does everybody notice that's 3 years into a business model? So for me, it's about patience, keep driving the strategy and the vision you want to do, and showing the traction you've got. So $1 billion in customer loan acquisition, not
Yeah.
origination, is
Yeah.
already a big
Yeah.
deal.
Yeah.
What's your vision for the future? How do you continue to change? You said something about deep learning. Where do you go from there?
Yeah. So I mean, so including in addition to building out our technology, our business has basically 3 pillars. That's marketing efforts, how to acquire customers more efficiently among market participants, the technology that digitizes the loan application process, and the tool underneath that helps measure the risk a little bit better. And then on the backside, we want to create a standardized loan product that is short-term in duration and helps SMEs get access to capital quicker.
Wow, so you've got a lot of different strategies to create new P&L lines for yourself.
Yeah, and you have to take it one step at a time, right? You got to walk before you run.
Yep.
And I think that adds to the elongation of the process. But I think slow and steady wins the race, and then you have these kind of moments that you get this fast acceleration. You have this plateau period, and then it's not like this, it's kind of like that.
Tell me one more time about, we talked earlier before a couple of times, you talked once about this word sacrifice.
Yeah.
What does sacrifice mean?
So sacrifice means living without a paycheck for a year and a half or more, or whatever it takes. It means putting in the hours when it doesn't look like it's going. It's really, being in a startup, this is my first startup, is a really emotional experience, because your livelihood is tied to this project, and where you end up. And so, you have these moments like this, and you're like, oh my gosh, it's like a miracle. We're going to close some funding. That's really exciting. But that ends up being short-lived, and you kind of push through.
Back to the work.
Back to the work. And that's where it comes. And I think one reason why we've gotten a lot of traction and have been successful as a team is, from an experience background, we're really diverse. Marcus is an entrepreneur lifelong. This is all he's ever done. Martin runs a software development agency that develops software. No one knows UX and software development better than this guy. Alan, he's an equity sales guy in the past. He knows this pitch. I'm working on Wall Street. I have an accounting operations background, and so we each kind of bring these skill sets together, and that augments the team. That's the synergy.
What's the average age of the team?
40. I'm 35.
40.
Yeah.
So you're the young guy.
I'm the young guy. So
Okay.
they always like, back in my day.
Please
that
take
never
the free
happened.
tuition out of this. I mean, this is why we open up the Maker Zone. I want to show you things, because it's a mature team with various skill sets who are all deep in the industries and around the industries that they wanted to change, and they're busy changing the industry.
Yeah.
And it's through the hard work and the sacrifice is what I'm getting out of it. Any other advice? And also, what do you most want people to do with Lenditapp in the future? Where do you want to go? And kind of what's your call to action to the world? If you want to see one thing in 5 years from now, what is it?
Oh, man. Look, I think that at the end of the day, I'm really a fighter for the small guy, and small businesses are the bedrock of the economy. And I would just love to see them be able to access the capital markets in a transparent and fair way, because the developed world's economies are stagnant. And I think a large part of that is because SMEs aren't getting capital they need, because they represent more than 90% of businesses in these economies. They supply 2/3 of job growth. These are your barbershops, your cornerstone bodegas, your daycares. These are the people that in your community that you work with every day. And so I think it's a really noble cause, and that's I want to see all lenders being able to use our tool to do that more effectively.
Joachim Shaw spoke on that day when you were at the finals, the Kickstart Accelerator. One of the things he said was, I don't invest in the ideas, I invest in the team. And the team's got to be all in and be able to pivot or change their business model over time. And what you talked about today, Matt, was emotion. And you hear that when you talk about it. You got to be emotionally into your product.
Yeah.
And I think that's a big difference as well in terms of founding teams actually getting. So to wrap up with a couple technical definitions, if you don't mind, traction basically, as you've heard it and understood from the context, means that the business is growing, which a lot of the banking businesses that you've seen are not growing, we're shrinking. So traction means, are we be able to track customer growth, the number of customers, the amount of business that they're doing with us, the number of places we're able to open up, the number of channels, new services we can offer. So that's traction when you're looking at a startup. And pivoting means just changing your business model fundamentally. When you see one thing isn't working, you can rapidly jump to the next stone that's just attainable, and then to the next stone, and you keep changing your business model. Just enough to survive and start to generate positive cash flow.
Yeah, absolutely.
So, I congratulate you guys. Deep respect for what you're doing. It's awesome.
Thank you.
I think you're very mature for someone who's just been in Kickstart Accelerator. You guys are almost too mature to be there, but it's awesome that you're here in Switzerland and you can grow here.
No, it was a fantastic experience. And look, you got to stay young. And so I wanted to spend a lot more time with Martin. There was a lot of great corporate sponsors in that program that did a lot of good stuff, and I met a lot of great people there, between the startups, the corporates, my business partner, and I look forward to continuing, working in Switzerland. It's great.
That's cool. So if people want to get in touch with you, how do they do it?
Yeah, so you can reach me at matt@lenditapp.com. If you're a lender, if you're a VC, if you're a merchant, if you're someone who's just interested in startups, I'm happy to talk. It'd be great, especially if you're passionate about small business lending.
And that's the way the world works, is it goes around, comes around. People help each other in the startup world. That's why I'm really attracted to it, and that the corporate world doesn't have that a lot of the time.
No.
The startup and the fintech world does. So you've got the fintech moniker. I'm sorry for that. I think the startup more applies to you guys. So good luck to you.
Hey,
I appreciate it.
Really appreciate it, man.
Cheers, Matt.
Take care.
Thanks for
Cheers.
coming by.
Yep.
So let's take some questions. I like questions. What do you guys got?